Welcome to Realcast, the weekly roundup of the real asset markets. I'm joined by Nicole Dines and Paul Strome. Let's start with you, Nicole. What have you been watching this week?
Well, Real Asset Media had a briefing on health tech and precision medicine, and we've been following on Realcast the life sciences sector quite closely because obviously it's been growing massively recently. It was attracting interest before COVID, but clearly it's become a real focus. The pandemic had made it a real focus for investors as well. It's attracted even more interest. And Emma Goodford of Knight Frank said that there's a weight of money coming, and it's not a bubble, but it's going to continue coming because there's underlying demand, and there's a huge need for space. And she said something interesting. The life sciences, she said, don't do real estate. They build communities because obviously the buildings and then tend to be pretty special buildings are crucial. But you also need to create a sort of ecosystem, and that's why the trend is for specialist locations where these clusters can thrive. And a successful example is the Golden Triangle of Cambridge, Oxford, London. But such prime locations are becoming very, very expensive. And Goodford was saying there was a recent transactions at £24 million per acre, which she said was 10 times what it would have cost 2 years ago before the pandemic, just to give an idea of how high prices have got. So one solution clearly is to find other places, other locations which are outside the southeast. And the one example that's been very successful is Glasgow, which has the biggest university research hospital in Europe, one of the biggest in the world, which is the Queen Elizabeth University Hospital. And around it, they have created a massive sort of life sciences and innovation cluster, which has been very successful. And they managed to do what is called the triple helix, which means a strategic partnership between industry, the university, and the NHS, which is encouraging collaboration and partnerships, which are crucial to the success of the sector. And obviously these things don't happen overnight. And Glasgow made a decision years ago to invest in precision medicine, and which is a sector which had a global market value of $43 million in 2016, but it will be worth 134 by 2025. So it's really, this investment has really encouraged companies, both established companies, but very much, a lot of startups as well to go there. So it's really encouraging innovation. And that's also goes hand in hand with the social impact. So it not only helps the economy, clearly creating jobs at all levels, regenerating the economy, regenerating the area, but also it creates a good environment for people to live. And a place like Glasgow, obviously, which unlike Oxford or Cambridge, land prices and house prices are much lower. All the companies there point out that their employees can have a very good quality of life, can afford, to buy or rent a place to live. And the spirit of sort of partnership and collaboration leads to a better, well-being. Another thing I followed this week is another briefing that Real Asset Media had on the Netherlands, which had a pretty rough couple of years simply because investment volumes dropped from 20 billion in 2020 to 14 in 2021, mainly because of obviously the pandemic, but also higher taxes on residential, which sort of froze the market for a while because resi is obviously a big focus for investors in the Dutch market. But there's a lot of optimism that things are they're turning around. There's a lot of investor interest. The market is still seen as very attractive, especially the two key sectors of residential and logistics. But the problem is, the big issue is what was called the race for space. It's a small country, opportunities are limited, and then it's just very, very difficult. So there's a huge competition between investors to grab the few opportunities that come up in the market, but also between sectors, especially residential and logistics. And the experts on the panel said that the Dutch government is very much giving priority to residential at the moment, because obviously there's a need for housing. It has an objective of building 100,000 homes a year. At the moment, about 65,000 are being built. So building them is not easy. The regulations are very strict, as I was saying, a shortage of land, but also they were pointing out that the government wants people to build homes, but it doesn't make it very easy for them to do so because it's very difficult to get permits. They take years. It's very complex and sort of lengthy process. It can take years or even decades, they said. So that does not help. Logistics has done incredibly well in 2021. It had record take-up levels, and that trend will continue as far as investor appetite is concerned. But as René Bach pointed out, the problem again is not investor appetite, but it is space. So you expect volumes to decline by about 10% in the market, simply due to lack of availability, both of warehouses and of land to build new product on. So that this sort of race for space, war for space, is set to continue in the Dutch market.
Yeah, two very interesting sessions. I also had an interview with Rene, and he highlighted the increased focus on robotization in the logistics market. And Dennis Delart also mentioned the focus on ESG, particularly on the finance side there in the Dutch market for Berlin Hip. Paul, what have you been watching?
Well, a report from JLL this week revealed that a record 97 billion euros was invested into multifamily markets across Europe in 2021. That's 50% up on 2020, which was at the time an all-time high. The firm describes it as a coming of age, actually the report's title for the multifamily sector, and said it confirms the multifamily market's resilience against volatility that was caused by the pandemic. JLL says things like continued urbanization, changes to household formations, affordability challenges, supply-demand imbalance contribute to structural changes in how the largest real estate investors allocate capital. There are signs that the growth in multifamily is pushing investors into secondary city locations. It is also putting emerging markets such as the UK, where institutional build to rent is in its infancy, onto the investor map. The week has seen this point illustrated with some high-profile site acquisitions in London. A joint venture of Rockwell and US-headquartered alternative investor Cerberus acquired London's Hurlingham Retail Park, Wandsworth Bridge Road. That'll provide 269 apartments and gardens, commercial space, etc. And this week, rental housing specialist Greystar Real Estate Partners paid £26.5 million for a West London trading estate, where it's planning to develop 407 apartments, of which 318 are built to rent and 89 are affordable. The project's aimed at young professionals. The company now has 14,000 owned and managed apartments and beds in multifamily and student accommodation across the UK. A closely linked sector, purpose-built student accommodation, has also had a record year, according to market research advisory firm Bonnar. The firm issued its third annual student housing report and said occupancy of purpose-built student accommodation is back to pre-pandemic levels in many countries. Deals collectively hit 5.8 billion euros in 2021, and if you take investment activity into account, it exceeds 8.8 billion, the report says. The firm also said that the pandemic confirmed the fundamental that students still prefer to study on site, and the consequent counter-cyclical nature of the sector has attracted investors. So by September 2021, average occupancy rate stood at 94%. The week also saw an interesting PBSA story from the Student Hotel, which has actually lined up 145 million euros in social and environmental impact financing for two of its new developments in Italy. Italy headquartered bank UniCredit is providing the finance for the projects, and the deal is being supported by financial insurance company SACE, which is providing 54 million euro green guarantee. The loan requires that both schemes achieve a BREEAM very good rating and adhere to EU taxonomy for sustainable activities. In return, the student hotel will get a discounted rate, which is passing on to students in the form of a rent reduction scholarship for students from disadvantaged socioeconomic backgrounds.
Yes, I think it's interesting that focus on impact financing. And PBSA was also in the news with Kane and Fusion students forming a joint venture with a 1.5 billion target. I also did several interviews around the life science sector, which is a growing focus for investors, including Ivan McKee, Minister of Trade, Investment and Innovation in the Scottish Government. And he was highlighting the
it's hugely important.
Life
it's one
sciences,
of the sectors that we
particularly in innovation, as well as a growing sector, very much backed by the Scottish Government, as well as Glasgow as a city. Thank you, Paul. Thank you, Nicole. Thank you for joining us, and look forward to seeing you next week for our regular roundup of the real asset markets.